Now, I know most of you have been told that trading news is a bad idea, that you should never trade news, but trading news can actually grow your account if you know how to trade news. Now, it's basically just momentum. That is how you should look at it, because whenever there's a news event, it usually pushes the market further. It usually increases the volume of the market. And this is why trading can be scary and also can be beneficial for most. Now, for me, it has actually worked well for me. I've always been trading news for the longest time, because this is where you'll find most of the volume during these market conditions. And the kind of news I'm talking about are CPA, NFP, FOMC, and these are news that you can trade on all types of financial instruments. You can trade stock options, you can trade futures, you can trade ETFs, you can even trade Forex. So all you need to know is that news just gives you volume. That is all to it, so long as your technicals are correct, which is what I'm going to be showing you in this video, how to actually set up your technicals for news so that you don't find yourself on the wrong side of news. So this is NVIDIA chart, okay? This is a 4 hour of NVIDIA, and NVIDIA had their earnings on Q1, okay? This was way back in May, and earnings is also a news event, so you should also look out for earnings. Actually, these Q2 earnings for this week, there are a couple of tickers that or companies that will be revealing their Q2 earnings this week, so that is also something that you can look out for. But if you look at NVIDIA over here, way back in May, okay, I'm going to just quickly zoom in here on earnings. Okay, you can see there is a resistance level over here, because I actually work with resistance or order blocks. So I'm just going to draw one over here. Okay, I'm going to draw one level over there, and I'm going to go to the weekly. Okay, I'm going to go to the weekly chart or the weekly time frame. And with the weekly time frame, you can actually do a top-down analysis. Okay, so what I normally do is look at the weekly. Okay, I see if there is any level that I need to mark. Okay, I look for levels and I look for candle types. Now, as you can see over here, we have, this is a shooting star. Okay, it's a reversal candlestick. So this is what I typically look for. Okay, reversal candlesticks, they usually indicate that the market is about to reverse, okay, or go to the opposite direction. So what followed was a bearish candlestick. Okay, now this is a strong indication or a confirmation that the market was going to head down. As you can see, the market headed down, okay, all the way down. If I can just draw this over here, okay, this is basically showing you that this market was on a downtrend. Okay, now you wouldn't have known that. You wouldn't have known that this market was headed down. What would have indicated that this market was going down was this close, the close of this weekly candlestick, which is a reversal candlestick. Okay, now once you have notated that, you can scale down to a lower time frame, like the daily time frame. Okay, now as you can see, it's much more clearer in the daily time frame. We can see much more candlesticks. Okay, this just basically shows you the days. These are different days of the week. So what happens here, if I can just hide these candlesticks, okay, because we're assuming we're still over here. Okay, the market hasn't yet moved. So what I like to do, I like to hide that section over there, and then you're going to have something like this. All right, so this right here is that shooting star candlestick. Okay, all right, so we have Monday, Tuesday, Wednesday, Thursday, and Friday. Okay, so remember the weekly candle, we identified a shooting star. All right, so after that shooting star was a bearish move, which was this one here that was starting the following weekly candle, which was a bearish move. Okay, so actually I'm going to hide also that Monday. All right, so now we have up till Friday. So we can also see here on the daily, we also have this reversal. This is also another reversal candlestick. This one is known as a spinning top, which is also a reversal, a very strong reversal candlesticks. Now these reversal candlesticks are more powerful, or they are more significant in the higher time frames, from 4-hour, daily, and weekly. So the higher the time frame, the stronger the move is going to make. So all you needed to do from here was just look for this level. Okay, you see where I've drawn this rectangle over here? This was a reversal of the market trend, because we've known that it's going to be a reversal because of the reversal candlesticks. Okay, so you place your rectangle, or you draw your rectangle or your resistance level over here just above the market structure. Okay, the market structure is basically when it's forming a higher high and a higher low. Okay, a higher high and a higher low is basically something like this. Okay, so that is a higher high when the market's at the peak level at the top, and then a higher low is this. Okay, and then it continues with another higher high and higher low and higher high and higher low. So that is basically what it is. So when something like this happens and you notate a reversal candle, a reversal candlestick over here where we are notated on the weekly level, you're going to draw your rectangle or your level, okay, just at the previous higher high. All right, just like that. So this is the market setup that you want to identify, okay, just before any news event on a higher time frame. Okay, so now we're going to scale down on a 4-hour time frame. Okay, I'm going to go down to the 4-hour time frame. Okay, and I'm still going to move this up to Friday. Okay, so I'm going to extend this level, okay, this resistance level all the way there, and then now where you want to get into the market is when the market breaks this level and retest. As you can see, we have a retest over here. Here is where you could have gotten into the market on the 4-hour time frame. Okay, I typically wait for the 4-hour close. You can wait for the 4-hour close, you can wait for the daily close, but the 4-hour close is the the smallest time frame you want to get in for a swing trade. So what I would look for is an entry. As you can see, we have a confirmation of a bearish or engulfing candlestick over here, which usually confirms a downward direction of the market. Okay, so what I would do, I would get our short position. I would basically enter at the close of that bearish engulfing candlestick. I enter my trade there, okay, and now to make sure my take profit is just above the resistance level up over here. Okay, and then now what you want to do, as you can see, the market went all the way down, as you can see over here, which actually hit our take profit. Now what you can do, you can hold this market. Okay, you can hold this market maybe if you want to take more profits or you want to get into another trade. Okay, because we have a market structure that is forming a bearish move over here. So what you can do, you can even extend this level over here. So as you can see, so long as it's below this resistance level, there's no indication that the market is going to be broken. There's no indication that the market is going to break this level and continue up. So what you could have done is probably enter over here. Okay, you grab your short position. Okay, you can see here we have a spinning top candlestick. Okay, this is also another reversal candlestick. So just at the close of that, you can enter your trade over here. Okay, so you have another entry over here, and you'd have successfully gotten into a perfect trade with this entry over here. As you can see, our TP was hit over here, TP was first hit over here, and our second TP was hit over here. So as long as this level, these two levels haven't been broken, there is no indication as to this market reversing and going back up. So we're still on a bearish move, and this is likely to continue. And these are the kind of setups that I normally look for when I'm trading news. Okay, this is the same setup I would look for if I'm trading FOMC, CPI, like I said earlier, NFP. So the market will always follow the technical rules. Okay, sometimes the fundamental does affect the news, but most of the time it just follows the technical. And once you're good at trading technicals, you won't really have a problem with trading news, because news is just a driving factor. Okay, it just speeds up the news. I mean, it just speeds up the move. So you shouldn't really worry too much about the news. So long as your technicals are right, the fundamentals will always follow the technicals most of the time. Okay, we can also look for another ticker. Okay, let's have a look at Apple. Okay, let's have a look at the earnings. The earnings of Apple. Now, Apple had their earnings way back in April as well. So this was Q1. So again, I'm going to start with the weekly. Okay, and just unstretch these. Okay, so here we have the weekly, rather the earnings over here. Okay, so if I click on the earnings, the news was positive for Apple. Okay, if I click on this, as you can see, the news was positive, but that won't really affect the news because, like I said, it's just momentum. News is just going to drive momentum and also give you volume for the technicals. So what I can already see here is a level of structure, okay, or market structure. So we're going to draw our resistance level over here. Okay, that's the weekly. and then I'm going to scale it down to daily. Okay, all right, and here we can see much more candlesticks. And remember, the earnings was here. Okay, the earning was for Apple was on Thursday, 30th April. Now if we go back, we can see this level was respected, was first respected over here. Okay, the support, the resistance level was first respected here way back from December 2025. Okay, it also respected it over here, so it was touched twice, but here's where it was broken. Okay, during the earnings report, so it was broken, but it also gapped out over here. Okay, there's a gap. Now the reason why this level was showing that not this level, but this market was indicating that it was going to go up and continue to the upside, but not necessarily break, because we didn't know it was going to break this market structure. Okay, what you would have seen over here are these reversal candlesticks. Okay, you can see we have a spinning top over here, we also have another spinning top over here, and we also have another spinning top over here. So what you would have done is entered a long position over here, because this market was, there was a level over here. If I go to the smaller time frame, to the 4 hour, okay, if I go to the 4 hour, you can see we have a small level over here where there's a market structure that formed. Okay, this level was broken and retested. So it was broken over here, retested over here, retested again over here, and also a third time. So this basically shows you that this level has been tested multiple times. Sellers were unable to break this level, and buyers stepped in and they pushed the market upwards. So what you would have done over here, since we knew on the daily time frame we had reversal candlesticks, you'd have pretty much gone to the lower time frame over here and notated this level, this market structure level over here. Okay, basically drawing your level with your rectangle. You can use a rectangle, you can use a line, but I prefer using rectangles. So you can draw a small rectangle over here just to see clearly the levels that have been broken and retested multiple times. Okay, actually 3 times over here. So you can even see we have more reversal candlesticks over here that were indicating that this market was going to reject this level and continue to the upside. So we'd have still entered over here, okay, because of this the indication of this candlestick over here, or rather this shooting star. This is a shooting star reversal candlestick over here, and this is a spinning top candlestick over here. Okay, so either way you'd have entered here, okay, or you just enter it over here at the close of that reversal candlestick. Okay, you can have your level over there, maybe just reduce your take profit and then just ride the market up. Okay, you don't even need to put your this is your stop loss. Okay, and then just ride the market up, so you don't even need to place your take profit over here. Okay, just what I normally do is just place my stop loss and then just wait for the market to continue up. Okay, so that is one way that you have also entered Apple during the earnings week or just before the earnings week. Okay, I prefer entering the market before the earnings week or before the day of the earnings, so that way I just get more momentum and the market drives my profits up. So when it comes to news, these are the things that I personally look for. Just go to the higher time frame, I do a top-down analysis, I look for market structure, break of market structure, I draw my support and resistance levels, or they're also called order blocks. I also look for reversal candlesticks. Okay, these are the ones that are powerful, these are the ones that are going to indicate that this market is about to do a reversal. So hopefully this video was helpful. Hopefully you're going to be able to trade news with a little bit of confidence and not have to worry about the fundamentals. And if you found this video valuable, be sure to like and subscribe. See you in the next one.